What if I told you you could buy a home for less than the price of your iPhone? I'm going to show you exactly how I've helped clients purchase a home for nearly no money down and how you could potentially do it for just $1,000 out of pocket. Now, can you really buy a home for $1,000 down? The answer is yes. Although it can technically be a little bit challenging and we may not get exactly down to $1,000 today, I'm going to give you a prime example of how you can make the move with as little money down as possible. If you're looking at making the move from being a renter or purchasing your first home in Lancaster or York area, there are a couple of great programs that can help you out. In this video, we're going to be focusing on the 80/20 loan. This is a conventional loan done by Fulton, and essentially what it does is it gives you two loans, one of 20%, one of 80% to bring you up to 100% financing. This means you don't have to put any money down towards a down payment. But what about those closing costs, I hear you ask? Well, don't worry, we've got that covered as well. Now, assuming you qualify, and for this product, there are various income and credit restrictions. For example, I think currently you have to earn less than $84,000 a year, and you have to have a credit score of above 680. But assuming you qualify, this loan does enable you to ask for up to 3% seller help. This 3% of the purchase price can be used to help reduce your closing costs. Now, you are going to have to target certain types of property, and I can't promise we're going to be buying a $400,000 dream home just yet. But if you're looking at making that switch from renting to owning, this could be a great way of doing it. Another perk of this particular program is, again, depending on your credit and your financial situation, you may also qualify for an additional $2,500 grant from Fulton. I actually had a couple last year who were looking at purchasing, and they were both able to get the grant. So we had an additional $5,000 towards their closing costs on top of 3% seller help. Choose this property as an example. So 513 Green Street in Lancaster. It's $155,000. It's been on the market for about 70 days currently, and they have already done a price reduction a couple of weeks ago. This would be a great example of the type of property that I would try and get seller help on, and could be a great alternative to renting. Now let's break down the closing costs. So we'll quickly go over what closing costs are and how you can help reduce them. So here we have a buyer's estimated closing cost sheet. On the right-hand side, we have the various information: purchase price, closing costs, something called lender escrows. Lender escrows are a separate bank account that you put money into when you purchase a home. And every month, as you pay your mortgage, you also pay a certain amount of money into this account. And then what happens is the bank will pay things like your home insurance and property taxes as they come up through the year. You also have reimbursements to seller. The seller will have already paid a proportion of property taxes for the year, so you'll be repaying them for ones that they've already paid. But that means you won't have to pay until they're due. If you go down to the closing cost section, we have origination costs. You may have mortgage discount points. Those are what you use to be able to reduce your interest rate. But if we elect to keep the interest rate where it is, we save money by not having to pay that. Something you will have to pay for upfront will be an appraisal. These typically run somewhere between $500 to $900. And there are smaller fees like credit report, document preparation, wire fees, agent commission fees, and transfer taxes. Tax is the big one because it's 2% of the property value, typically 1% paid by the buyer, 1% paid by the seller. On a home like this, you may even be able to reduce your closing costs further by asking the seller to pay both sides of the transfer tax. If we scroll back up to the top, we have a settlement date of the 31st of October. One of the things to, again, help you reduce those closing costs is to close towards the end of the month. Let's say you bought a home on the 2nd of October. You would have to prepay the interest for the 2nd, 3rd, 4th, 5th, 6th, all the way up to the end of the month. Whereas if you're closing towards the end of the month, you only have to pay 1 or 2 days. Now, what I would say is if you close on the 2nd of October, your first mortgage payment isn't going to be until the 1st of December. And that date is going to stay the same if you close on the 31st of October. So just be mindful that although you may have lower closing costs initially, you will have to make that first mortgage payment much sooner. One of the reasons why I chose this property is that the annual taxes are pretty low at around $1,200. So again, the higher the taxes are, the higher the purchase price, the more you're going to have to pay in the taxes themselves, be that transfer tax or prepaying or repaying the annual property taxes. Now, in this case, we're going to ask for the full 3% seller help. This means we're going to have around $4,600 towards our closing costs. If you look on the right-hand side, the estimated cash to close is around $4,441. Now, how can we get that lower? With Fulton Bank, we might be able to get ourselves a $2,500 credit. So that automatically gets us down to around $1,900. They also do an incentive where if you open a bank account, you get, I think it's around $300 to $400 towards your closing costs as well. So then we're down to around $1,600. And if you did manage to get the seller to pay both sides of the transfer tax, you may even be able to reduce that by an additional $1,500. So then you're basically closing for nothing. Now, unfortunately, you can't actually close for nothing. You have to have some money out of pocket when buying a home. But if you can close for around $1,000 to $2,000, you're in pretty good shape. And if you're still not sure about making the jump from renting to home ownership, if we look down here at the ongoing monthly payment, this is going to be your estimated payment each month for your taxes, insurance, and mortgage. This is a 3-bedroom home. So let's say you had a friend rent a room from you for $500 or $600. You may find that you've managed to be able to buy a home for less than $2,000 all in. And your estimated monthly payment before utilities is going to be around $600. And even if you're going to be living there with your family or by yourself, $1,100 is still a lot cheaper than most 2 or 3-bedroom apartments in Lancaster. If you're a first-time home buyer or someone who's looking at making the jump from being a renter to a homeowner and you don't have loads of cash to put down, click the link in the description below to sign up for a client call, and we can talk strategy and see how we could potentially get you into a home for around $1,000 all in.